Hey there, and welcome to our video about the potential ban of Bitcoin as money in the United States, and how it is shaping up to be a battle between Bitcoin and CBDCs. With the growing popularity of cryptocurrencies like Bitcoin, governments and central banks around the world are starting to take notice and explore the potential of digital currencies. But with this new technology comes new challenges, particularly in terms of regulation and oversight. So, in this video, we'll explore the current regulatory landscape for cryptocurrencies and CBDCs, and discuss what the future may hold for these digital assets. Are you ready? Let's head straight to it. Why is the USA considering a ban on Bitcoin? The idea of a Bitcoin ban in the USA is not new, but it has gained momentum in recent years. One of the major concerns that the US government has with Bitcoin is its volatility, which makes it difficult to regulate and tax. In fact, the price of Bitcoin has seen extreme fluctuations over the years. In 2017, the price of Bitcoin reached an all-time high of almost $20,000, only to plummet to around $3,000 in the following year. In 2021, the price of Bitcoin surged to almost $60,000, only to drop around $30,000 in a matter of weeks. Another major concern for the US government is the anonymity associated with Bitcoin transactions. The decentralized nature of Bitcoin means that transactions are recorded on a public ledger, but the identity of the individuals involved in the transaction is not revealed. This makes Bitcoin a popular tool for illegal activities such as money laundering, tax evasion, and terrorist financing. In fact, a report by Chainalysis found that in 2020, illicit activity accounted for 0.34% of all cryptocurrency transaction volume, which equates to approximately $10 billion. Furthermore, the risk that Bitcoin poses to national security has also raised alarm bells for regulators. The decentralized nature of Bitcoin means that it is not controlled by any government or central authority. This makes it difficult for governments to track and regulate the flow of funds, which can be a significant risk to national security. In addition, the rise of ransomware attacks in recent years has also highlighted the potential risk associated with cryptocurrencies. According to a report by Coveware, the average ransomware payment increased from $84,000 in Q4 2019 to $220,000 in Q1 2021, with the majority of payments made in Bitcoin. In addition to these concerns, the rise of CBDCs is also contributing to the discussion around a potential Bitcoin ban. CBDCs are digital currencies issued by central banks that are backed by fiat currency reserves and can be used for transactions in the same way as traditional currency. This poses a direct threat to Bitcoin, which is not backed by any government or central authority. If CBDCs become widely adopted, it would mean that the need for decentralized cryptocurrencies such as Bitcoin would decrease, making it less valuable. There are several reasons why the USA is considering a ban on Bitcoin as a currency. The volatility of Bitcoin, the anonymity associated with transactions, the risk to national security, and the rise of CBDCs are all contributing factors. While a ban on Bitcoin as a currency may not necessarily mean the end of Bitcoin as an asset, it would have significant implications for the cryptocurrency market. It is important for investors to keep a close eye on developments in the market and to make informed decisions based on their own risk tolerance and investment goals. Implications of a Bitcoin ban. The potential ban on Bitcoin in the USA is not the only threat to the cryptocurrency. China, which is one of the largest markets for Bitcoin mining and trading, has also cracked down on cryptocurrencies in recent years. In 2017, the Chinese government banned initial coin offerings or ICOs, which are a form of fundraising using cryptocurrencies. In 2019, China also banned cryptocurrency exchanges, which are platforms that allow individuals to buy and sell cryptocurrencies. The Chinese government's crackdown on cryptocurrencies has had a significant impact on the market. In 2017, when the ICO ban was announced, the price of Bitcoin dropped by almost 10%. In addition, the ban on cryptocurrency exchanges has made it difficult for Chinese investors to access the cryptocurrency market. This has led to a decrease in the overall demand for cryptocurrencies, which has had a negative impact on their value. The Chinese government's crackdown on cryptocurrencies is a part of a larger effort to control the financial system and prevent capital flight. The government is concerned about the potential risk associated with cryptocurrencies such as money laundering and fraud. In addition, the government is also concerned about the impact that cryptocurrencies could have on the stability of the financial system. China is not the only country that has expressed concerns about the impact of cryptocurrencies on the financial system. In 2018, the Financial Stability Board, or FSB, issued a report that identified potential risk associated with cryptocurrencies. The report highlighted the lack of regulation and the potential for cryptocurrencies to be used for illegal activities such as money laundering and terrorism financing. Despite the concerns expressed by governments and regulatory bodies, the adoption of cryptocurrencies continues to grow. In 2021, the total market capitalization of cryptocurrencies exceeded $2 trillion, with Bitcoin accounting for the majority of the market share. In addition, more and more companies are accepting cryptocurrencies as a form of payment. For example, in 2021, Tesla announced that it had invested $1.5 billion in Bitcoin and would accept Bitcoin as payment for its products. The potential ban on Bitcoin in the USA is not the only threat to the cryptocurrency market. The Chinese government's crackdown on cryptocurrencies and the concerns expressed by regulatory bodies highlight the potential risk associated with cryptocurrencies. However, the adoption of cryptocurrencies continues to grow, and more companies are accepting them as a form of payment. It is important for investors to be aware of the risk and to make informed decisions based on their own risk tolerance and investment goals. Before we move on to the next part of the video, we want to ask you an interesting question about the topic we've been discussing. Do you think that governments and central banks will be successful in banning Bitcoin as money? Or do you think that the demand for decentralized and digital currencies will continue to grow, despite regulatory challenges? Let us know your thoughts in the comments below. And while you're at it, make sure to hit the like and subscribe buttons to stay up to date with all of our latest content. Alright, let's move on. The battle between Bitcoin and CBDC. As governments and central banks explore the possibility of issuing their own digital currencies, there's a growing debate over the future of Bitcoin and other cryptocurrencies. The World Economic Forum, or WEF, has proposed the development of a central bank digital currency that could be used to facilitate cross-border payments and promote financial inclusion. A CBDC is a digital version of a country's currency that is backed by the government or central bank. CBDCs would be issued and regulated by central banks and would operate in a similar way to physical cash. CBDCs would be stored in digital wallets and could be used for online transactions, peer-to-peer payments, and cross-border payments. The development of CBDCs has been driven by several factors, including the increasing use of digital payments, the rise of cryptocurrencies, and the need to modernize the financial system. CBDCs have the potential to reduce the cost and time required for cross-border payments, as well as promote financial inclusion by providing access to digital payments to those who do not have access to traditional banking services. However, the development of CBDCs could also have significant implications for the cryptocurrency market. CBDCs could compete with cryptocurrencies such as Bitcoin for use as a medium of exchange, store value, and unit of account. This could lead to a decline in the demand of cryptocurrencies and a decrease in their value. On the other hand, some experts believe that CBDCs and cryptocurrencies could coexist and even complement each other. CBDCs could provide a more stable and reliable form of digital currency, while cryptocurrencies could offer greater privacy and decentralization. Ultimately, the battle between Bitcoin and CBDCs will depend on several factors, including the adoption and regulation of CBDCs, the continued growth and adoption of cryptocurrencies, and the evolution of the financial system. It is important for investors to stay informed about these developments and to consider the potential risk and opportunities associated with investing in cryptocurrencies and CBDCs. What do you think the future holds for Bitcoin and CBDCs? Do you think CBDCs will replace cryptocurrencies, or will they coexist and complement each other? Share your thoughts in the comments below. Now, what does the future hold for Bitcoin and CBDCs? Despite the uncertainties surrounding the regulatory landscape and the potential for a Bitcoin ban, the future of cryptocurrencies and CBDCs remains promising. Here are some potential developments to watch for in the coming years. Greater adoption of cryptocurrencies. While Bitcoin and other cryptocurrencies may face challenges from governments and central banks, there is a still growing demand for decentralized and digital forms of currencies. As more businesses and individuals adopt cryptocurrencies, the value and utility of these assets may increase. Integration with traditional finance. Some experts predict that cryptocurrencies and traditional finance will eventually merge, with banks and other financial institutions integrating cryptocurrencies into their existing services. This could lead to greater legitimacy and adoption of cryptocurrencies as a mainstream financial asset. Innovation in the cryptocurrency market. Despite the potential risks and challenges, the cryptocurrency market remains a hotbed of innovation, with developers and entrepreneurs creating new applications and use cases for digital assets. As the technology behind cryptocurrencies continues to evolve, we may see new breakthroughs and advancements that further enhance their utility and value. Further development of CBDCs. As governments and central banks continue to explore CBDCs, we may see the developments of new digital currencies that offer increased security, stability, and regulation. CBDCs could also lead to greater financial inclusion, as individuals who are unbanked or underbanked gain access to a digital currency that is backed by government or central bank. Regulation and oversight. As the cryptocurrency market continues to evolve and grow, we can expect to see increased regulation and oversight from governments and central banks. While this may initially create challenges for cryptocurrency enthusiasts and investors, it could also lead to a greater legitimacy and stability for the market as a whole. Now, the future of cryptocurrencies and CBDCs is still largely unknown, and it is impossible to predict with certainty what will happen in the years to come. However, by staying informed about the latest developments in the market and regulatory landscape, investors can make more informed decisions about how to navigate this rapidly evolving landscape. While the potential for a Bitcoin ban is a real possibility, it is important to remember that the future of cryptocurrencies and CBDCs remains promising. As the market continues to evolve and mature, we can expect to see new innovations, applications, and use cases that further enhance the value and utility of these assets. Some of you might not know what CBDC is, but do not worry, we have a video for that one and you can check it right here. This is Diversified Streams. We'll see you on the next one.